Hey guys, Bill Soriano here from Pittsburgh. It's Sunday 8/13 already, August 13th, and it's time to go over a weekly outlook where we go through all 28 pairs. We determine the daily trend bias. We find a 4-hour order block to trade from that is going with that daily trend bias. We put an alert at the point of interest in that 4-hour order block, and we set our alert there, right? I show you how we use a free indicator to identify these order blocks if you're new to trading. This indicator for me is accurate about 80 to 90% of the time, but sometimes it uses some volatility calculations inside of it, and sometimes it doesn't show the correct order block that I want to trade from. But most times it is correct. These order blocks must meet 3 criteria. They must lead to a break of structure, have an engulfing candle, and must cause imbalance, right? They must not have already been mitigated. And then, of course, once these alerts are hit, we drop down to our 15-minute chart, wait for our entry model, which is lower time frame flip. And if you watched my video in the group here from yesterday, you'll see that I went over the 3 winning trades here. See where we're at here. Let me just refresh this page here. And while that's refreshing, these are results that we've gotten here in the month of August so far. These are all the trades that went off using the strategy that I teach here for free in this group for the rest of the month here anyway. And then in September, there will be a small fee to get into this. But we're currently at 6 wins, 3 losses, 67% win rate, and a 9% gain on our trading account. In the month of July, we had 33 trade opportunities that executed, 21 wins, 12 losses, 64% win rate, and a 30% gain on our account had you taken all 33 trades. Right? So in our group here, you're going to see that yesterday, I posted this video here, and I went through the 3 trades from last week, the 3 winning trades. There were no losing trades last week. And I used the replay mode in TradingView to actually show you where, when, and why we would have taken these trades, right? So today, what we're going to do is we're going to go through and we're going to mark up the order blocks, okay? So we're going to start at the top here. Basically, we go to the daily chart. We look for the daily bias, which is usually easy to see. You can see that this is clearly in a downtrend. We have this. We go to the 4-hour here. We see this. We have this 4-hour order block right here that's been marked up from this break of structure here, and we can see the price just missed hitting our point of interest inside of that order block. Right, just missed it. And it did react off of there. So we're still waiting for price to come back up and actually hit this point of interest and move further into this order block to see what will happen there. Okay, so our alert is currently set for there. We don't have a new break of structure, so we don't have a new order block to identify. Okay, going through the AUD pairs first, we could see we're clearly in a downtrend. And we have our 4-hour order block still marked up here, right? So we did get a break of structure here. You could see that the indicator is showing us, this is our Smart Money Concepts Lux Algo indicator. It's free in TradingView. Just go to indicators here and search for it, and it'll come up for you. And it is giving us an order block right here, but this one's already been mitigated, as you can see here from this wick. So we're waiting for price to move up higher here before making a move back down. Now, during the week, we can also get a new break of structure to the downside, and that could possibly identify a different order block for us, right? So we could actually set a break of structure alert right here. Right. So we will do that and move on to the next pair here. look at the daily chart, we can see we're still kind of bullish here. We did get this move down, but we would really need to get a move down past here in order for this to possibly turn bearish. So we're still bullish on this pair here. And I don't think we don't have any order blocks marked up for this one. This order block here has already been mitigated. Price has already bounced off of it. So we have an order block marked up down here much lower. And again, during the week, when I check the charts, I usually go through them all Monday and Tuesday evening, just to see if there's been any new recent breaks of structure on the 4-hour chart to see if we can identify a new order block. And so we would need price to move up above here for that to happen. AUD, NZD, again, we always go to the daily chart first. We want to see what is the order flow. This one's hard to tell, see? This has really been consolidating here. The most recent order flow, though, was bearish, right? Your indicators are still kind of giving you a bearish order flow here, as you could see. Price did, though, close above the 200-day. So, you know, overall, it's kind of bearish. But, you know, with this one, because of this recent consolidation here, we're waiting for price to move out one way or the other here, right? We either need to get a break of structure here to the downside, or possibly get a new break of structure here to the upside, right? So we're not going to mark up any order blocks on this pair. As we go through all 28 pairs here, there are a few pairs where we don't mark up an order block because I just don't like anything I see. I don't like the direction of the daily trend. The daily trend isn't clear, right? AUD USD. So this was a trade from last week that I showed you. This wasn't a trade that executed, but this never came back to our area. So let's just remove the drawings here so we can get a fresh look at this. This kind of looks the same way, right? You have bullish order flow here, then the order flow turns bearish, right? You get the choke here, the break of structure, the change of character, and then the choke plus. So we're kind of bearish on this, but we kind of need a break of structure down here in order for us to mark up an order block still. So we're going to put a alert down here. These are just break of structure alerts, right? I'll usually take and put right here, break of structure, so that when that alert goes off and I come to this chart, I know whenever it's a red line that it's a break of structure alert. Now we're getting into the CAD pairs here. And wait, let's go back to the AUD USD. We were not on the 4-hour chart here. Okay, so we have this bearish order flow here, like we were saying, but on the daily, we were bullish and then bearish. So yes, so we are bearish. So we do have an order block right here, because we got this recent break of structure down here. We can actually mark up this order block right here. So I was on I forgot to drop down to the 4-hour chart. That's why I didn't originally see this. So that is where we would look to trade from right there. We're going to get rid of these flags here also. So on the CAD CHF pair, we're bearish here. Our order flow is bearish on this one. And again, there's been no recent break of structure here. This is kind of like a consolidation here. Okay. So we have this move down here. This area has already been mitigated. This area has been mitigated. So again, this consolidation here it's hard to trade from these consolidations. You don't really want to get stuck in here because the price is just kind of moving up and down. And so what's happening is when you get this, you don't know which way the banks and institutions are going to go with this because they're building up all this liquidity. They're building up all this, sell side liquidity up here, buy side liquidity down here, and you don't know which way they're going to go. So you kind of have to wait for price to break out one way or the other to tell you what it's going to do. So right now, though, we do have this order block right here marked up because it hasn't been mitigated and our order flow on the daily is bearish. So that's where we would look to trade from. Now, if we get a break of structure to the downside here on Monday or Tuesday, then we can mark up a fresh area to trade from. But right now, this is what we're looking at. CAD, Let's see what we got here. We have this bullish order flow here. We did get a choke or a change of character, but we don't get an actual trend change. So we are still looking to trade. Again, we're looking for a break of structure up here, and then we could identify this order block area down here. Right now we have this order block marked up, and so we're waiting for price to come back down to here to hit our point of interest, right? That's the blue line. Now, as you're using this smart money concepts, once you're done, you're going to shut that off, and then all you're going to see are the actual order blocks that you want to trade from. And then we do use this indicator once price hits our point of interest lines here. When we drop down to the 15-minute chart and we wait for our break of structure there, that gives us our change of character or choke that tells us we can now set our buy or sell limit order. We can use this indicator again to identify those areas where we want to get into the trade. Okay, so the indicator is very helpful, and like I said, I use it, but there's about 20% of the time where it's just not giving me, it just isn't making sense, right? And that's what most indicators do. Again, using smart money concepts, you don't really, a true smart money, concept strategy, you don't really use indicators to take, at all, but we use the indicators just to help us, because I put the indicators on here just to help beginners to see the trend. That's what the moving averages help you with, and also to mark up the order blocks. But, we just take our trades when off of price action. So on the daily, we have, look at this, very, very, obviously very bullish price action here, order flow. And from that, we have an area right here that we can now mark up because we got this breakout out of this consolidation area here. So now we have a nice area down here. Let's put our indicator back on. It's giving us two areas here. So what don't I like about the first area is we don't have an engulfing candle, right? So this red candle would be the bank or institutional candle for a buying opportunity. It's the last down candle before the up move that causes the break of structure and preferably leaves imbalance. Now we do have some imbalance. So I like this area down here because I have the engulfing candle after my banker candle. Again, if you don't understand these terms, then you have to register and go through my my free 9-part Smart Money Concepts video series, and you'll get one video a day for 9 days, and we'll teach you all this stuff about break of structure, mitigation, imbalance, banker candles, all that kind of stuff, so that you'll know what I'm saying. I can't take the time to teach that here when I'm going through these charts. So we're going to set our alert right there. EUR, AUD, this was a winning trade from last week. So we went over this at the chart markups. Like I said, I go over it here. I show you exactly where, when, and why I take the trade, why we would have taken the trade. Again, I'm not taking all of these trades, but these are all the trades that have executed using this strategy on the 28 pairs that I watch. Okay. And then, of course, that's the trade recap that I do on Saturdays. And then during the week, though, as these trades go off, I do post the chart markups here in the group. And then, of course, we have the trading journal right here. And I'll put this in the group at the end of the month. And of course, this has links to each of the trades as well, showing you the trade and you know how the charts were marked up. So let's see where we're at here now. So what we want to do is we remove the drawings. We remove the drawings. Here we go. So on the daily, we're going to see this bullish order flow here as price moved out of this consolidation area. And so now we have this new area here. Again, we don't have an engulfing candle. Down here we do, but we have these wicks coming down mitigating this. So sometimes what we'll do is you know, we'll highlight this 4-hour zone and we'll drop down to the 1 hour to see if we can identify a candle there. And you can see we have a nice, we have the last down candle here before this up move. This is a nice big engulfing candle, and we have all this imbalance here. So we're able to use the 1 hour to identify our point of interest right here. Okay. But again, that 1 hour point of interest is always inside of the 4-hour order block. Okay. So it's kind of, you know, as you can see here, it's the last, wait, I think I marked that up wrong. Okay, now I got it right. You see, if we were trying to use this candle, then we would have our point of interest all the way up here, and that wouldn't be any good because all the imbalance is down below. See? So that's why, because we didn't get that engulfing candle. Okay. And so this is where we want to have it. So that's where we have our point of interest marked up here for this pair. Okay, let's remove that flag. EURCAD was another winner. And so let's just remove the drawings for now, for the new week here. We go to the daily. Okay, you can see somewhat of a consolidation in here. Price was, price was in an uptrend here. We got a change of character here. We got a second break. So we are in a downtrend, then price moved back up. So our area here to trade from is up here. So I mark up this whole area. I mark up the whole area that the indicator gives me for the order block. A lot of times it's not correct. Really, to me, the order block should be this blue candle right here. So it should be from wick to wick there. But, you know, this just gives me a little more flexibility with the order block. And it doesn't matter because I'm not going to look to trade this until this point of interest, the open of this blue candle, until that area is hit. Okay. EURCHF. And I'm on the wrong. It's my fault. My fault. I'm on the wrong chart again. Let me go back here to EURCAD. So EURCAD, if we're saying that this is bearish order flow, then on the 4-hour, see, we would need to mark up this area right here. So that's actually where we're looking for price to come to. Okay, this area up here would be a daily. That would be a daily order block. We don't want to trade from there. So let's get rid of that. Yeah, EURCHF on the daily. Looking on the daily, we see the bearish order flow, right? And again, we drop down. If we use the daily to identify the trend. We want to trade with the long-term trend, right? And we use the 4-hour to mark up the order block. Now, again, we have a consolidation here. I don't like any of these areas. There's no break of structure. So if I'm going to look, what I need is I have a break of structure alert set here from last week. We're looking for price to come down here. so that we can identify an order block down here. So if we were going to mark up an order block right now, yeah, we would have to go much higher up, right? So we would have to look at, maybe this area right here has already been mitigated or hit. This area right here we don't like. So we're just going to leave our break of structure alert down here, wait for price to move down here, hopefully, and then we'll get that alert and we'll be able to identify an area to trade from. Okay, EUR GBP on the daily, we had this bearish order flow, right? And then a consolidation. We have this order block here marked up that it looked like, no, this isn't our order block. That's the indicator. Right. No, that is. It looks like when you go to the 4 hour, I keep forgetting to go down to the 4 hour to get the order block. So here's the order block right here, and here's our point of interest. But for some reason, there's no alert on there. So price didn't hit it, but we definitely want to put that alert right there. And we're getting through the EUR pairs, the Euro pairs here. We could see bullish order flow here on the EUR JPY. We did get that. See that move up. We were looking for this break of structure, I guess. We were looking for this to come down to here and then move up, but it never came down to there. Okay, so now we have this area right here. And again, we don't have our engulfing candle. So let's see if this area down here does give us our engulfing candle, right? But we do get a break of structure and then mitigation on that candle. So let's see if we can find a 1 hour inside of this zone here. Drop down to the 1 hour. And we do have a candle right here that we can trade from because there is a lot of imbalance down here. So we can put our point of interest right there. Okay, so that gives us our point of interest inside of our 4 hour order block to trade from, right? Look, the price come down here. Let's see if we can get rid of all these lines that I put in here last week. Okay. So again, once you shut the indicator off, it'll be clear to you. Let me see. It'll be clear to you where the point of interest is at. We can get rid of this one now because we had the break of structure there to the upside. Okay, EUR NZD was a trade that took off last week but never executed for us. So I went over that. I go over that in this live session right here. I show you in this live session here, I forgot to go over the 3 pairs. In this session here, I show you the 3 wins, where, when, and why we took the trade on the 15-minute after the 4 hour point of interest was hit. Here I show you the 3 pairs that price just took off on and never came back to our to execute our lower time frame flip, so we couldn't get in the trade. But again, that's okay. Sometimes that happens. So let's just remove all of our drawings here, see what we got on the daily. We're going to get rid of these flags too here. So on the daily, we have bullish order flow. Drop down to the 4 hour. We see this. Let's turn our indicator back on. We could see this. It's giving us this area down here, which is good. But I like this area right here. I get this wick coming down here on the red candle. It's grabbing some liquidity down here, which is a good sign. Again, I have an engulfing candle after it. It leaves imbalance. So I'm looking to trade right from here. I don't know. For some reason, though, the indicator doesn't like this area. Like I said, there's some volatility, things built into the indicator. And that may be why it's not highlighting this area right here for us. But to me, this is a great area to trade from. I have an institutional candle. There's a wick coming down, grabbing liquidity underneath this consolidation. I have the engulfing candle right after the banker candle, and I have imbalance. So I have everything I need to mark up that area. And again, we don't trade. Some people just set their limit order right here on the 4-hour point of entry and they get in the trade. We don't do that. We drop down to the 15-minute. We wait for price to tell us it's now safe to go the other way by getting that break of structure, which creates a change of character or choke. And then we know we can mark up our order block then on the 15-minute chart to set our limit order. Okay, let's go. Wait, did we put our alert on there? Yeah. Our thing seems to be messed up. We're on a GBP USD pair now. Again, we had this bullish order flow. It's coming down, but you don't really get any kind of change of character for me until this breaks structure down here. So we're still very bullish. It looks like we may have an order block marked up here that may have gotten hit at some point. So it looks like it got hit right here. Was this one of our, let me see something. No, this was not one of our trades from last week. So it looks like this order block was hit though. Let me just look here on the 15-minute what actually happens here. Okay, so that must have been some time ago. Let's go back here to 4 of them. Okay, we're going to, this area has obviously already been hit. And price reacted off of it. Then we have another consolidation here. We have this consolidation area right here. Let's say I'm just a little bit confused as what happened here. We would have to go down lower, right? So right here, what we're going to do is we're going to set a break of structure alert here, looking for price to move higher. So let's just put this alert up here, and we'll come back and check this, like I said, Monday and Tuesday, or if the alert goes off before then. EUR USD, let's look on the daily chart here. Looks like we have some break of structure alerts that were set up. We are bullish. Our order flow is still bullish, even though we do have this big move down here. On the 4-hour here, we have this order block down here marked up. So this is there's still an alert on here. So we're waiting for price to move down through these order blocks here that the indicator is giving us. These aren't valid order blocks to me because there's no break of structure. I need to get a clean break of structure to the upside here. I do have a break of structure alert set right here as well. So if that goes off, I know I can then use one of these areas in here for my order block. But right now it's going to be set down here. GBP AUD was a winning trade from last week. So let's just remove our drawings and go to the daily chart. We're going to see very bullish order flow. You don't even have to look at that long to see that. We have this area here. It was hit before and then it reacted off of it. So now what we need is, we don't want to trade off this area again, right? We need price to move higher. We definitely need a break of structure here to the upside, and that's where we'll set our alert. GBP CAD on the daily chart here. Again, very bullish order flow. In the 4-hour, it looks like we have an alert set down here on the 4-hour chart, right? So that should be right on the open of that candle, right? And if we shut this off, we can see where that order block is at, right? Now, we were able to use that order block because we do get a break of structure here. We also get a break of structure looking over here as well. This one here, it really isn't enough for me. You can see the indicators telling us we have a break of structure right here. But yeah, that's that. I was looking for it to break over here, which it did. UBP CHF on the daily. See a big consolidation here. See, big consolidation going all the way back here. You had bearish order flow. That order flow didn't quite, it kind of turned bullish, right? And then it just consolidated, man. So really, we have a break of structure alert set down here. Just looking for price to break structure so that we could trade from one of these order blocks right here coming down, because really the last order flow, clear order flow we had was bearish. Okay, so that's why we have this break of structure alert set here from last week. We drew this little line here saying we were waiting for price to move down. So we're still kind of waiting for that to happen. GBP JPY. Again, very bullish order flow on the daily. And we have, well, we got a clean break of structure to the upside here. So now we have this order block here. We get the engulfing candle. So we do have imbalance. So this is a valid order block for me. And so we're going to change our point of interest to the open of that red candle right there. That's where we'll put our alert. And we'll be able to get rid of these ones down here at this point, right? Looks like we also have one a little bit further. And now we just have here the indicator. When we shut the indicator off, we just see our order block right there. And we're set up for that GBP NZD. Let's go to the daily here with very bullish order flow on the daily. We got a clean break of structure to the upside. What don't we have here? We don't have an engulfing candle, right? This red candle is bigger than the blue candle. Of course, down here we do have that engulfing candle, but let's see if we can find a better candle here if we drop down to the 1 hour chart. And you can see here that you don't really get it. See, so when you come back up here, and we're gonna leave our alert set down here on this red candle right here. So we're gonna wait for price to come all the way down here. Now, if we get another break of structure during the week, which we'll probably get, then we'll be able to identify another area. But right now, I don't like this area. It's probably an area the price is gonna just move right through, right? You can see price may come down into this area. You may get like a little bit of a reaction up, and it'll end up being a failed order block, and price will move down into this one. That's what I'm looking at right now. And we get to the NZD pairs here. Let's look at the daily real fast. The daily here, we have the bearish order flow coming down, right? We look at the 4 hour chart. We did get a clean break of structure. We do have this order block right here. The indicator's giving us a little bit different one. But this is actually the last up candle before this down move that causes the break of structure and gives us our imbalance. So this is where our point of interest alert is going to go at the open of that blue candle there. And we'll probably get rid of all this other stuff we have marked up here. It looks like we had an alert all the way over here, all the way up here, but price has been moving downward. Okay, NZD Chef, very bearish order flow, as you can see here. We have the clean break of structure to the downside here, giving us this order block, which the indicator is giving us, which is good. And we have our point of interest at the open of this blue candle right here. So that's where we're going to set our alert there for the week. We can get rid of this one. We can get rid of this one. We had an alert set all the way up here. And like I showed you, once you shut this indicator off, you'll just see your order block. And we have this alert here we can get rid of. Just a few more pairs left here, guys. On the daily, NZDJPY, we're still bullish. We're still bullish on the daily. Of course, you see how you have this internal break of structure here, and the indicator wants to give us this order block down here, which has been hit. I don't like that. I'm going to need to see, I don't know, I'm going to need to see at least one more break of structure to the upside here. Hopefully it comes up and takes out this high up here. Right now, we have this giant area down here. And if we just kind of look at this, just use the body of this red candle here. I don't know if we can see, we may have somewhere to trade. We may have a better candle down here. And we kind of do have an area down here where we have an engulfing candle and we do have some imbalance. Yep. Actually have a lot of imbalance. Let's put an alert. We'll put an alert right here. Again, we don't trade off it, so we still wait for confirmation on the 15-minute. So we're going to put an alert right there. And so because this is a nice area obviously to trade from. This area here I don't like. It's probably going to fail. It's already hit that area. I'm looking for price to come lower here before I look to get in this trade. And again, of course, if we get a break of structure to the upside up here, then that's going to change. NZD USD was one of those pairs that just took off on us last week. Couldn't get back in. Couldn't get it. The lower time frame flip entry didn't execute. Just took off. Now again, we did get. Did we get it? We do get a break of structure to the downside there. Slightly, but this still is in a big consolidation from this move up. So it's still kind of bullish to me. But when you look at this 4-hour order flow, you could see here the breaks of structure coming down. And does it actually have? So right here, you see how price moves down and breaks this structure right here. That gives us our choke. Then it pulls back, it breaks structure again, pulls back, breaks structure again. So we get our choke plus. So this actually does turn bearish on the daily chart. So we can therefore mark up this order block right here because we have a nice banker candle. We have a nice engulfing candle after it, and we do have some imbalance, lots of imbalance actually. So we're going to set our point of interest alert right there, and we can look to come there and then take this down further. And now we're on the last 3 USD pairs. USD CAD here had some invalid hits here. Let's just remove the draw and see what we're looking at. The daily chart certainly appears to be bearish, right? However, when you look at the 4-hour, you're seeing a lot of good bullish order flow here on the 4-hour, kind of like we've seen on the last pair. So if I'm going to see if there was actually I can't see a clear, this is bearish to me. Okay, now we get a change of character right here, but we don't get a choke plus. I'm still looking to take this down. I'm still looking to take this down. And what I have is, I have an area over here. You see this area right here. These areas have already been hit, obviously. If I come up to this area right here, I can mark up this 4-hour candle, and I can put an alert right here to take this down because I'm not convinced it's going up yet. However, you know, so, I'm looking for price to come up here. However, once it does come up to there, if you look on the daily chart here, if you get a pullback and then price moves up to there, that could actually be giving us a trend change. Now, if it just shoots up here, if it just kind of shoots straight up, then I'd be looking to take it down, right? But if we get like a pullback, right? And then we get that second break of structure to the upside, then I'm a little bit worried about this. So what I'm going to do is I'm going to mark inside this order block here. I'm just going to say check trend. Right, I'm just going to tell myself to check for a trend change. Okay, because that may be changing if it does move up to there. So right now, we're right here. And I can't trade from any of these areas here. I could trade from this area down here, but again, I think the overall daily order flow is bearish. Okay, USD, CHF. You can see the bearish order flow there clearly, right? We have looks like we have a area marked up here on the 4-hour, this area over here, looking for price to hit that area. So we have an alert set on USD CHF, and then the last pair is USD JPY. Again, if we look to the daily, we do see bullish order flow. There was an attempt to get this to change. We had a change of character, move down here, pulled back, but then it started going back up. So we're still bullish here. And on the 4-hour, we have some new breaks of structure here, see? So this area here, I don't like. This area here, I don't like. This area right here, I like. You see this candle here? See this big engulfing candle after it? So there is some imbalance there. It's a very small area, but if price stays inside there, we can actually trade this up from there. There's our point of interest. Now, more than likely what's going to happen is, right, price is going to move down. It's going to go right through there, and we're going to put another point of interest alert right here. So if this area holds on the 4-hour, if we get a move down and we don't get a close below this order block on the 4-hour and it holds, then we could trade off of it. But more than likely, it's going to come right down to this area here. And then there's even a chance it comes all the way down. So we're just going to leave all these alerts valid right now. So there you are, guys. We went through all 28 pairs. We identified the daily trend bias. We found a 4-hour order block to trade from going with that trend bias. We identified our point of interest inside that 4-hour order block, and we set our alert there, right? We used an indicator to help us. It was right most of the time, right? Now, there were some pairs that we couldn't set. We couldn't identify an order block on. So on Monday night, on Monday evening, Tuesday evening, I go back through the charts again, and I check to see if there's been any clean breaks of structure to get us to identify those order blocks. And we did set some break of structure alerts as well. The order blocks had 3 criteria they had to meet. They must lead to a break of structure, must have an engulfing candle after the banker or institutional candle, must cause imbalance. Again, if you don't know what that is, send me a message so you can register for my free 9-part Smart Money Concepts video series. The order block must not have already been mitigated or touched, okay? And so we'll wait for these order blocks. We'll wait for these points of interest to get hit. And once they do, we drop down to the 15-minute chart and we wait for our entry model, which is a lower time frame flip, right? And I show you that I showed you that in great detail in this video right here. So make sure you watch this video because I went over the 3 winning trades from last week and I showed you how that lower time frame flip executed. Showed you where you would want to get in, when you would want to get in, where, when, and why, right? The 3 W's, where, when, and why. So that's great, guys. And again, I've been teaching this strategy for free for months. I wasn't keeping track of it though for you, but now I am keeping track. As I said, we have this is our July spreadsheet. I don't have links for every one of the trades. I didn't start putting the links until later. And I also started putting the time when the lower time frame flip executed. This way we can see when the majority of these trades are executing. Are they during the New York session, the London session, or the Asian session, right? We can look and see, well, which session has a larger percentage of winning trades and also a larger percentage of losing trades, right? That tell us to stay away from certain sessions. That can even give us a better win percentage, right? But you could see for the month of July, 21 wins, 12 losses, 64% winning percentage, 30% gain on your account. Had you taken all 33 trades. Now, probably wouldn't have taken all 33 trades, but that's what it would have been if you had taken them all, right? And then, of course, so far in August here, we're at 6 wins, 3 losses, 9 trades, 67% winning percentage, and a 9% gain on your account had you taken all these trades. That's because all trades are a 1 to 2 risk to reward ratio trade, right? We risk 1% to get a 2% gain. So if our stop loss is 20 pips away, we shoot for a 40 pip profit. If it's 30 pips, a 60 pip profit, right? It's always 1 to 2. This is the best thing to do until you're a very advanced trader and you come up with your own method. Because with this strategy, you can lose 2 out of 3 trades and still break even. And you can make money winning just 40% of your trades. Okay? So it gives you the best chance. Now, do some of these trades go to a higher percentage win? Yes, they do. And you can see here, I marked this in here. I do keep track of that. I look to see if they go, you can see this trade here went all the way to a 5R before it came back down to where we got in. This one, the same thing. We had 2 trades here. This went to a 3R, this went to a 4R. But the problem is, on these other trades, if you try to get to a 3, 4, or 5R, you don't make it and you end up getting stopped out of the loss. So we keep track of this, and at some point we may decide, okay, let's move our risk or risk to reward up to a 1 to 2.5, and we'll see what happens, right? And if we still do good there, then we can eventually move it up to 1 to 3. But right now, the best thing to do for you is to stay with a 1 to 2, right? It's a 1 to 2 risk to reward ratio trade. Now, as I go over my video yesterday, I've been doing this for free, but starting in September, there will be a fee to get access to these videos that I do on Saturday and Sunday and during the week. Okay. This will still be a free group here, Forex Smart Money Trading Academy, but there's only going to be some chart markups in here and some occasional live sessions where I give you the what, why, where, when, and why I took the trade, like I did here. But the actual good stuff is going to be in a different group that you're going to have to pay to get in. And all you're going to have to do is to get in is you're going to have to join me in this escape room challenge right here. It's $25 a month to get this product that I promote. You can actually promote the product as well after you get in and earn an 80% commission or $20 a month from everyone that gets in. Okay. The reason why I'm doing this is because I can't continue to give this away for free. I don't want to charge a lot, right? And I don't really want to charge anything. You're getting my training as a bonus when you join this program. Okay. It's just 25 bucks a month to get access. And then you'll get access to a different group where these videos will be posted. Okay. Now, the reason I'm doing this is because most people don't have money to trade. right? So you need another way to make money, and affiliate marketing is a great way to do it. This is an affiliate company, pays 80% commissions, right? This will be able, you'll be able to learn how to do this. The company shows you how to do it, okay? So I'm not giving you a company to join, then you have no way to generate the sales for it, right? This company shows you how to do it, and our escape room challenge walks you through that 14 escape rooms, shows you how to build this affiliate marketing business and make money from it. Then you'll be able to save up some money for a trading account, start trading from your live account once you learn the strategy, once you're comfortable with it. Or you can use the money to take a funded challenge, get a 10,000, 25,000, 50,000, even $100,000 or more funded account where you're trading with other people's money. Okay, so that's the reason why I'm putting this small charge in here, because I just can't keep giving away for free. I don't really want to charge for it. I don't want to gouge anybody. So for 25 bucks a month, you'll get access to my training that I'm doing here as a free bonus for joining this program. And you'll learn how to do affiliate marketing, right? You'll have access to a product that will allow you to build your own websites, your own funnels, your own capture pages, things like that. There's a lot of done for you ones there ready to go. You can start making money with to sell the actual product that you're purchasing, and they pay 80% commission. So it's a win-win across the board here. And you're not really paying me for the training. This is just a bonus you get for joining me in this program. So again, guys, we will look for these alerts to go off during the week, and then if necessary, I'll do some live sessions here in the group. But either way, next Saturday, we'll do our trade recap, where I'll go over all the trades that executed. I'll show you why, when, and where I got in the trade. Did it win? Did it lose? And of course, we keep track of them in our journals, as you know here. And so that's it. So Bill Soriano from Pittsburgh. Again, if you need my free 9-part Smart Money Concepts video series, make sure you get with me so that I can send you that link. If you're watching this video on YouTube or social media and you need access to the group, just send me a message as well, and I'll send you the link to the group. On YouTube, I think the links are down in the description area. And if you're ready to join the company that we're with, get access to all of our live training 5 days a week, all of our custom-made indicators, all of our Discord channel, everything, plus everything the company has, all the live educators at the company, all the indicators they have there, all the video training they have there, take you from an absolute novice all the way up to an expert in Forex trading. Let me know that. I'll send you the link to that as well. And they have a 7-day money-back guarantee. So after you pay for it, if you don't like it, as long as you contact them within that 7-day window, you can get your money back. So Bill Soriano from Pittsburgh. Have a great week, guys. Take care. Find my exit button here.